Mr. Krishna Kumar joining us this morning from Sundaram Mutual. Good to have you with us, Krishna, and particularly at a time when markets seem to be going all guns blazing. A complete change in sentiment, it seems, this week. Are you as confident of this revival? Do you feel the bulls are now firmly back in charge, that we're actually going to proceed with strength from here on?
I think, there are 2-3 phases to this whole process. One, we were all expecting what the government and the RBI can do to restore growth back. The second, and market started moving a little bit on that hope. And the second part of the hope trade was when, the government acted and the RBI acted on this through certain measures that all of us are aware about. And the third leg of this trade now would be, the growth coming back. So as we've been discussing, I think October, November, this quarter is very important for a lot of the channel stocks to get cleaned out. And initial reports suggest that things have been better, although it always could be much better. I think things have been way better at this point in time. So we do believe that the worst is probably behind us, and we would start to get back to normal growth over the next 6 months, which is what our base case was, as we talked about. So I think the markets tend to place their bets a little ahead of the recovery. So we see that a lot of the beaten down sectors where they're more cyclical, domestic oriented, have seen some interest coming back. A lot of shorts have been covered and some new buying has also come in. So all this, I think, would lead to a more broader recovery across the markets. But I think the pace of recovery would be, again, very much data dependent from here. So I would place the bets on a slow improvement over the next 6 months from a market's perspective. But I think the worst is behind us, definitely.
Okay, Krishna, worst is behind us. I completely buy that. But markets are also trading at not throwaway valuations. From the day the corporate tax cut was announced, benchmark indices are up almost 10%. The mid and small cap stocks, at least the good ones which make sense, where it makes sense to put money, good quality mid cap stocks are up anywhere between 5 to 25%. So do you think the markets right now are already pricing in early signs of a weak recovery?
See, the answer is yes and no. Two things. One is that, as you said, a lot of stocks have held up pretty nicely over a period of time, and some have also rebounded. Good quality names. Yeah. So when you look at the overall market indices level, etc., you might not see that much of a significant appreciation, but if you kind of look at stocks more at a bottom-up level, you would find that you would see a lot of rotation that happens across sectors and across stocks, which would basically mean that an active fund manager would be able to make better returns than the broader market. So if broader market, if you believe a 10% is what we would get in the next 9 to 12 months, by looking at stocks more closely, building a more diversified portfolio with stock selection being better, you would be able to beat that by another couple of basis points at least, is my view. So I think there would be definitely a lot of new winners that would come through, and something which is probably performed very well would start to kind of moderate in terms of move. So that would happen as money rotates across ideas.
Fair enough. Krishna, if you're talking about rotation, what's the next big trend according to you?
I think, if you look at the domestic cyclicals part of the economy, be it even the consumer cyclicals, look at auto, look at, the apparel businesses, a lot of them have been under tremendous stress in terms of growth. So we do believe that with the panic of sharp 50% drop in volumes, etc., going away from autos, a panic of SSG turning negative, etc., going away from some of the apparel companies, etc. We do see that a lot of these companies would come back pretty nicely. Auto components again have been battered out of shape because of the weakness in commercial vehicles and cars, and they're available at very attractive values. So I think Nikunj was referring to valuations. I think auto is a great space. Auto components is a great space where valuations have really taken a big knock. Of course, if you look at earnings PE, you would definitely find them super expensive. But I think at the bottom of a cycle, you don't look at PE multiples, but you would probably like to look at it more from a enterprise value to the kind of business that they can generate.
Cement, that's a sector that you remain fairly bullish on. And given what we've seen in the first half of the year, the demand recovery here remains rather pivotal. How are you looking at fundamentals within the cement space?
Cement, I think from a medium-term to long-term perspective, capacity addition is going to be tougher and tougher, given the kind of availability of limestone reserves in the country. The other part is, again, building out distribution. A lot of these things are going to be difficult. So I think the top 5-6 companies would continue to consolidate market share over a period of time and call the prices basically. So we believe there will be a lot of price discipline that will naturally seep into the industry more as a rule than as an exception. The second thing is the costs have been pretty much under control and dropping. So we see margin expansion from there. Third, demand definitely, as I said, is very, very key. Housing is pretty much okay on the mid-market, but government spend has been a little low. So we do expect in the next 6 months, this will pick up with government spending opening up, liquidity getting better. So we should see an improved demand outlook for cement from here on, and the fourth quarter would be far, far better from a demand perspective. So medium term, I think it's a great industry, domestic play. Though a commodity, it's kind of shielded from global forces, and I think well managed by the top 4-5 players, and the industry that will consolidate further as we go forward.
My only fear, KK, is that while all the economic assumptions may hold true in terms of the way economy will heal, do you think that there is a lot of excitement, hope, hype, in the market about government action post corporate tax cut? The view on the street is that disinvestment will be a smooth process. Long-term tax will go away, personal tax will only come down, and government will really fix the economy as if they have a magical wand. So do you think somewhere, at least from the government action side, so where markets have been surprised, there could be a greater room to get disappointed, not because of the intention, but purely because of the pace and purely because of the process?
I think a couple of things. If you look at the taxation on the stocks, if you look at the capital gains, etc., I think these are all what the people expect is actually a reset to what they did in the past. So it's not that there is a benefit that somebody is seeking, but normalizing back to what should not have been done and what's done being reversed. So that's one thing. And I think the Prime Minister at the highest forums has, say in the US, has promised that he will further bring in more tax reforms in the country. So timing is, not sure, but sometime it will happen. Second, even if you were to believe that some reforms on capital gains taxes, etc., happen, there isn't much of capital gains taxes that the government will lose at this point in time if they cut the rate or cut the duration, etc. So I think it's more a feel-good at the near term than anything else. From a divestment perspective, I think clearly, that's one big lever that can help India delink itself from the rest of the world, rest of EMs where that could be pain. Divestment is a very, very significant reform, and foreigners and investors love it. So I think that's clearly the message. I think the government also sees that, and the government is very focused on getting foreign capital into the country, which is very important from the long-term growth perspective, as we are definitely a capital-starved nation. So I think the government would try its best to do a few big deals so that the path is set. It's not that they would want to sell 25 units at one go or in 6 months. That's not possible. Definitely, they will attempt to do 2 or 3 big names, big ticket, which will help the fiscal also, and also provide the necessary direction in terms of thought process and what the world can expect from India. I think that's where the government, is focused at this point in time.
Now, you
and
believe
doing
that
2-3 is not going to be tough. Doing an Air India, doing a BPCL, and probably 1 or 2 more, completing the Hindustan Zinc and few other which are hanging in there for some time. I think these are things which could be done in a 6 months to 9 months time frame.
All right, we'll let you go on that note. Thanks so much for taking time out and joining in.